Hey, welcome everybody to the 40 Finance channel. Today we're talking about Taiwan Semiconductor stock, and we're going to look ahead to TSMC for 2022 and beyond. Talk about the bull and bear cases for where this stock sits currently. Full disclosure, this is a stock I own in my portfolio, but even though I'm bullish for the long term, I do try to pick off both the bull and the bear case for this one. Also, for those of you who are interested, we're going to be featuring a lot of stuff from SeekingAlpha on this particular video. So if you're interested, my affiliate link is in the description for a significant discount on a SeekingAlpha annual subscription. Now let's jump into the details. Okay, now heading into 2022, I'm going to try to revamp these presentations a little bit. The number one feedback is always try to condense, consolidate, save time. So that's exactly what we're going to try out here. Leave me a note in the comments below how you like the more condensed version. Okay, let's look at the bull case for TSMC as it stands today. First of all, without question, is the most important fab company in the entire world. Okay, there's really no question about that. They have the top clients, they have the most production, they have the most advanced processes. This is the most important fab company by a mile, and the world would be in a tough place if TSMC were to ever stop producing chips, at least where we stand today in 2022. You see there on the second bullet point, we got 55% market share versus Samsung coming in at number 2, which has 17% of the market share. Now, obviously, if you follow the chip sector, you know that there's a lot of people trying to encroach and come into TSMC's market share. Samsung's pushing hard. Intel has big dreams for the next, 5 or 6 years. We'll see where it plays out, but as far as the scoreboard today, TSMC is number 1 by a mile. All right, next up, if you want to talk about profit margins, TSMC just hit their highest profit margin over the past 10 years, at least in the records that I found, coming in at 52% for the first 3 quarters of 2021. I would say it's pretty phenomenal, in my opinion, to see a company reach the highest profit margin that they've seen, particularly in the most recent environment, right? When we think about the logistics and we think about all the challenges that the pandemic has brought, pat on the back to TSMC for hitting a very high mark in the course of recent history. All right, number 4 here, and this is one of the big bull cases for me. The client list for Taiwan Semiconductor is super impressive. You've got Apple there at about 25% of revenue, AMD at 5%, Qualcomm, Broadcom, NVIDIA. You put that whole crew together, and I'll try to add it up quickly. You're at about 41%. Obviously, Apple is the big dog in there. But when you're a key supplier for the names that I've highlighted, and oh, by the way, Intel is in talks with TSMC to help them form some of their most advanced chips, to help them bridge the gap in their production of their own foundries. But when you have this type of client list, you know that you're producing quality, and you know that your clients are going to pay the bills. And the interesting thing about Taiwan Semiconductor, if you're not familiar, is they do not design their own chips. They do not market or sell their own chips. They are strictly a servicer for clients like this. So they are particularly agnostic because they want to create an open bidding war, basically, right? Where they can go to Apple, NVIDIA, etc. and say, yeah, we'll make capacity for you. In order to do that, it might cost more money. Well, when you're talking to companies like this, more money is typically not the concern. And then last point there, peak chip demand, rising prices. These are all things that we've seen since 2020. Is this the peak of the chip market? Is this the top and stuff comes down from here? It's really hard to tell. Most experts would say that we've got peak through at least 2022, potentially into 2023 before we see any sort of excess or glut on the market. At least from what I can tell, the orders are still coming in fast and furious, and Taiwan Semi is expanding their production footprint across several different countries. We'll talk about that next. All right, let's switch over to the bear case here. And I alluded to it just a second ago. Huge capital spend will put pressure on EPS growth in the short term. Now, 2021 was the big year of capital expenditure hitting the bottom line for TSMC, but it really wouldn't surprise me, quite honestly, if they continue to see outlays come out, unexpected ones from the budget. This is a tight company, but they have huge plans going on right now. And I'll just do a quick headline scan for you. We got this one back in April, $3 billion budget for China fab capacity expansion. We have confirming plans for semiconductor fab plant in Japan. That was October of this year. You've got the Arizona project here in the United States. They're moving chip equipment into it by the middle part of 2022. And in the potentials category, you have talks going on with Germany about creating another fab production facility. So to say that there's a lot of capital expenditure going on in TSMC is certainly an understatement. What I like about this, despite the pressure it could put on earnings, is really that they're expanding. Now, Taiwan is always going to be the hub of their greatest technology. They're keeping those secrets within the country. That's just the way it is. But for them to expand production into other countries, potentially help with logistics challenges, shipping costs, etc., I think it's a great move. Plus, anytime you can sort of diversify where you're building chips or where you're building products, no matter what company you are, it's obviously a good thing for the future. All right, so the bear case number one, I think, is really short term on the capital expenditures. It really is short term. If you're in this stock and you're buying this stock because you think 2022 is the year that it goes from about 120 bucks where it's at today to $400, it's not going to happen. So if you're looking for a quick buck, it's definitely not the stock for you. This is a company that is building infrastructure, growing rapidly for their size, but it's much more of an investment than it is a quick buck. All right, bear case number two on here, government interference, international politics. If you follow this stock, you know the ties between China and Taiwan. They're murky right now, and the Chinese government has been in the headlines for, shows of force, flying planes around the country, things like that, talks about taking it over. Really hard to tell how much is rumor mill, how much is just headline clickbait type information, but it's there. And if we learned anything from the Alibabas and similar type stocks, is the Chinese government is capable of wrecking a stock's fortune. So that is a real threat. That is out there. You also have international politics involved as well, because if China goes into Taiwan or makes threats to it, it could bring a whole world order together to try to protect the country. That would be wild and wacky, way beyond the scope of this channel, but just know that the threat exists. All right, bear case number three, the chip shortage becomes oversupply. So chip shortage becomes a chip glut, right? And all of a sudden, there's too many chips on the market and they have to lower prices. I, for one, am not particularly concerned about this on the bear case side, certainly not through 2022, and I'd be real surprised in 2023, to be honest with you, but it's out there. There will come a time when they've caught up to the outsized demand and the market turns either flat or you start to get price pressure. Happens in semiconductors all the time. So just know that when it does happen, it doesn't mean necessarily sell your chip stocks, but it does mean expect dips in the price, dips in the valuations. And if you've been in this sector for a long time, you know it goes through periods of innovation. We're in a peak period right now. How long does that last remains to be seen. All right, and then last on the bear case here, delays in the race to 3 nanometers and 2 nanometers. Listen, Apple, Samsung, Intel, All different players with different angles on TSM, but they're all looking for the next generation, right? Because that's where the next big sales are. We just talked about how all of a sudden we could go from outsized demand to outsized supply. That's why the next generation is so important. The likelihood of the average consumer being interested in 3 nanometers, 2 nanometers, honestly, it's pretty small. So let's just say you launch your advanced chips in 2023. By the time 2025 rolls around, consumers are buying those at a healthy clip, and now all of a sudden you're trying to build up for the next technology cycle. The bottom line for TSMC is that Apple is going to expect that type of delivery as their top client, and should they not be able to perform, that could pose a problem. Samsung's obviously coming in as a direct competitor. And then on the horizon, you have Intel, who's at least penciled in big dreams for 2024, 2025, and beyond. So any types of delays that TSMC would have to 3 nanometer, 2 nanometer, anything like that, anything advanced technology, I would imagine their stock price would take a small hit depending on the severity of the delays. We're already seeing rumors that some of this stuff could be pushed to 2023. Perhaps Samsung will be the first to actually reveal new units like this ahead of TSMC. That's not the end of the world, in my opinion. First to market in this game is not the end of the world. The real concern is, can you keep all of your customers happy because they have some big time demands to sell their latest and greatest products. All right, last segment here. Let's talk about price today for the stock and where it could project over 2022. So right now you're at 122.65. This is a massively profitable company, lots of cash in the bank, manageable debt load for their size, plenty of cash flow, no real concerns from a high level about the financial health of this company. So with that in mind, we can focus almost exclusively on earnings per share. All right, easiest way to start is just see where we're at right now. December of 2021, this earnings report will come out either late January, perhaps early February. But if it hits consensus estimate at 408, that would be for the fiscal year, your forward PE is about 30. Now, we're already in December, right? And we're heading into January. So I'm more concerned about the forward PE valuation. How much is the market going to pay for the earnings in the future? And with that, we're looking ahead to the December 2022 consensus estimate, which is 486. That would be an 18%, 19% growth from the year before. You got a low bar on the analysts of 462, high of 526. Okay, let's get into my price projection. This is for the first half of 2022 using the information we just saw. I'm coming in with the fiscal year 2022 EPS projection right now of $5, 14 cents above the consensus, which equals about plus 3%, I think, on my math. And I look back at TSM's performance, and they typically come in about plus 3% over analyst estimates, so I'm sticking with that trend. So it gives you $5. Forward price to earnings when they come out with their latest earnings report, which would be January, February, something like that. At that point, we are going to be looking forward to the end of 2022 from a valuation perspective. So I'm going to say the forward PE ratio at that time is 25. It is 30 today. Okay, it is 30 today, and it's been lower in the past, much lower in the high teens. Now it was 22, as you see I'm highlighting there, forward PE of 22 in 2019. So I'm kind of figuring that that's the closest one, that's pre-pandemic, but also low interest rates. Either way, I think the current forward PE is too high, and it wouldn't surprise me to see that come down a little bit. I'm sticking with 25. That gives you a price. 5 times 25 is $125, basically flat basically flat from today's price of 122. Keep in mind though, if you are a long-term stockholder here, you get your dividend, $1.93 a share as it stands right now on an annual basis. To me, this stock right now is just a hold. If you bought the shares cheaper, like I did, then hold on to it. The future looks great. When you see what's highlighted there, semiconductor industry has wild price fluctuations, okay? So we've already seen it somewhat with AMD, NVIDIA, where you're going to have huge days with huge announcements. Stock's going to run up. Then you're going to get a couple negative headlines on semis and they're going to tank. And right now, in my opinion, I would say you're looking for buying ops in TSMC of $115 or below. I took a look back at the charts and you did have a couple 115s, 114s in the late November, December stock market meltdown. Sort of seen that bounce back up. So you might be able to find it, but I would definitely be patient on this one. And if you're like me and you got in long before, keep holding, keep taking the dividends. There's a lot of bright things in the future. All right, guys, so that's the consolidated take on TSMC stock. Let me know what you think in the comments. As always, if you like this video, please give it a like, share with your friends, subscribe to the channel. Really appreciate your support. We'll see you on the next one.